Hello, this is Jordan. This video is being recorded on the evening of Sunday, June 11th, 2023. Thank you so much for joining me today. If you haven't already, be sure to click the subscribe button. I would really appreciate it. I don't want you to miss any of the great content that I'll have coming for the rest of the summer and beyond. Thank you. And in this video, I'm going to provide a weekly outlook for the precious metal sector. So let's get right into it. Normally I have only 2 slides or 2 charts for these videos, but I have 3 today, an extra one, just because I want to look at the daily chart here for gold, the daily candle chart. And the blue arrow there, you can see that gold a couple weeks ago rebounded from its 100-day moving average. If you recall something I talked about weeks ago, in bull markets, the corrections in gold, they typically go to only the 50-day moving average if gold is really hot and really running. Otherwise, it tends to bottom at the 100-day or the 150-day. So here we have a bottom, at least so far, holding at the 100-day moving average, which is right about 1950 right now. You have the market itself closed last week at 1977. But looking at the daily chart, there's, some obvious levels for support and resistance. So you have support right around 1950. We can see, that was resistance in January, going back to the beginning of the year. It was support in March. We can, if we go back the last, 3.5 weeks or so, 1955 is probably a better representation of daily support. But I don't want to get, way too specific here. I guess we can say 1950, 1955, you have support there. And then you have resistance at, it looks like 1990 and 2000. So if the gold market could make a daily close above 2000 and then hold it, that would be really interesting. That would cause me to think that, maybe the bottom for this correction in price is in. Maybe I'm being conservative. I tend to think that there's more to go on the downside. But, perhaps we'll know in the next week or two as gold, for the time being, you have this clear support and resistance. Again, resistance 1990, 2000, support 1950 or even 1955. Now, if gold were to fall below that support, then the next support level to me looks like about 1900. And we also have the 150-day coming up. That's at 1898. So keep an eye on that. So gold is at an interesting point here. But we'll move on. And weekly charts are more important than daily. So on the weekly chart, gold last week it closed at 1977, just below 1980. The week before closed 1970 or 1969, also traded up to 1980. So if you look at that red line, you can see here on the weekly chart, 1980 on a weekly basis, that's really important resistance for gold. So, we have to be, I noted on the daily chart, there's some bullish possibilities, but looking at the weekly chart here, you have the hard sell-off below 1980, and then you had 2 weeks of, kind of an okay rebound. So it wouldn't be a surprise if we got a bearish candle, because we've seen in recent days, or the last 2 weeks, gold's testing 1980. And so if, 2 weeks, it was unable to get back above it on a weekly basis. So, maybe this would be a time for a bad week in a, I want to say a nasty bearish candle, but, there is that potential possibility. Now, and one thing is, because if you look at the stocks the last 2 days, the miners, which we'll get to, the action of the last 2 days is pretty, in the miners, they're showing relative weakness against gold and silver especially. However, the fly in that ointment as far as that bearish thinking is, silver had a pretty good week. Silver was up 3% on the week. Gold was up only $7. And, moving down there to silver, that the candle that it made last week, I mean, that's a much better candle, a much more bullish candle than the one that gold made. But of course, silver, you can see there is some weekly resistance there around 24.50. Silver closed just below that. But we will see, because if you want to go with a short-term bullish outlook, you'd say, silver is stronger than gold. That's a good sign. Maybe the market will have some legs. But if you look at the miners, you'll say, the last 2 days the miners are really weak, much weaker than gold. That's a bad sign. So I'm just thinking out loud. But again, getting back to silver here, if it were able to surpass that resistance at 24.50, it could test 26. And that would probably coincide with gold trading above 1980. So that, I mean, as far as like a bullish scenario for the next week or so, that's something to keep in mind. Now, the bearish scenario would that would have silver obviously failing at the initial resistance here and gold failing at 1980. So there is this stiff weekly resistance that both, gold and silver have to deal with right now. All right, so let's wrap this up with the miners. And so I put a rectangle around what is that? The last 1, 2, 3, 4, 5, 8 or 9 days of price action, and you can see at the bottom there, you can see silver is lagging. So interestingly, the silver itself leading gold the last couple days, showing relative strength. But then if you look at the silver stocks, SILJ, that's much weaker than GDX and GDXJ, especially the last couple days. So interesting divergence there. So yeah, just going by the candle analysis, this is not particularly bullish. I mean, I would lean bearish. And so GDX, closed at 31. You have the support at 30. You have the 200-day. We can round it up a little bit at 29. If there's more selling, beyond those levels, then you have that gap at 28. You also have lateral support there at 27. Meanwhile, for GDXJ, closed at 37.41. Has a confluence of support right around 35. The 200-day is now above 35. The horizontal line there is just below 36. So that's the initial support for GDXJ. And again, if GDX is going to, if that's going to fall to 27, then GDXJ would probably fall there down to 33. And for SILJ, closed at 9.78. It does have some support there below 950. But, in that scenario, if GDX and GDXJ are going to trade down to that lowest level, then you would probably see SILJ trade down to that level below 9. But one more thing to mention about the miners is, based on the breadth indicators, looking at the percentage, it closed above the 20-day and the 50-day moving averages. Those are not as extreme as they were 2 weeks ago, but they're still very oversold on a short-term basis. So again, it's an interesting point, because if we see a little more strength here this week, that could lead to more selling later. I mean, I would prefer, let's get more selling before the Fed and whatever they say, whatever they do, have the market kind of washed out on a short-term basis. These indicators will be even more oversold, and the Fed says they're going to hike the next month. That's already priced in and digested. Precious metals are really oversold, and then they get a big short-term bounce. But, that we would have to see a lot of selling to start the week for that scenario. All right, that's all for this video. Nothing tremendously exciting as far as my analysis this week, but let me know what you're thinking about the market. Leave me a comment. Thank you so much for tuning in. I'll talk to you guys again in the next video.